Welcome back to the Deep Dive. Today, we are taking on a true giant of business and media, Mark Cuban. You've seen him on Shark Tank, you've seen him yelling from the courtside seats. But his career is so much more than that. It's really about this relentless hunt for inefficiency. And we're going to start with a single purchase that just perfectly captures who he is.
Oh, you have to be talking about the jet, October 1999.
Exactly. The Gulfstream V private jet.
And this wasn't just him, splurging. This single transaction, which was $40 million, was actually certified by the Guinness World Records
For what, though?
as the largest single e-commerce transaction in history at that time.
$40 million for a jet bought completely online, sight unseen. I mean, that's not just buying a luxury item.
No, it's a statement. It was a massive statement about the future of the internet and, frankly, about the audacity of the guy who had just hit the .com lottery.
And that's the guy we're digging into today. An American businessman, an investor, a TV personality. And as of May 2025, Forbes has his net worth at, around $6 billion?
At least $6 billion, yeah. And our mission today is to really get past that public image for you. We've gone through the source material to find the pattern.
The pattern, okay.
Yeah, how does a kid from a working-class suburb of Pittsburgh get there? And maybe more importantly, how does he use that money now? We're looking for those, surprising facts, the aha moments that really show his method.
And we have a ton of sources to unpack here. We're covering his entire career arc, his perfectly timed escape from the .com crash, his really controversial run as a sports owner.
Not to mention the legal fights that shaped his whole view on government and his newest and maybe biggest disruption yet, taking on the healthcare industry with cost plus drugs.
Right, and that's the thread that connects all of it, isn't it? This willingness to challenge the big established institutions.
Absolutely. He's taken on the NBA, the SEC, the entire pharmaceutical supply chain. We're going to analyze how that anti-establishment, efficiency-first mindset really became the bedrock of his entire empire.
Okay, let's do it. Let's unpack this, and let's start where the sources tell us it all began, with the origins of that hustle. Mount Lebanon, Pennsylvania.
Right. And when we talk about his background, it's so important to get that he didn't come from money or tech privilege. He was born in 1958. His father, Norton Cuban, was an automobile upholsterer.
A skilled trade, for sure, but very working class.
Exactly. And his mom, Shirley, was described as someone who was always looking for the next thing a different job or different career goal every other week.
So it sounds like the environment at home was just one of constant practical hustle. He didn't just wait around for an allowance.
Not at all. The sources show this drive started early. We're talking age 12. He wasn't just selling garbage bags for some pocket money.
No, he was selling them for a very specific reason. Right?
A very specific reason. To afford a pair of expensive sneakers he wanted. That's a direct line between, I want this thing, and I need to do the work to get it. He learned that years before any business class.
It's like early arbitrage, right? He sees a demand, he finds a supply, even if it's just trash bags, and he goes door to door to make the capital.
That's the perfect way to put it. And a few years later, he's selling stamps and coins. But the real flash of genius, I think, comes when he's about 16.
The newspaper strike. You have to tell us this story because it shows such a sophisticated grasp of logistics for a teenager.
It's incredible.
Yeah.
So a newspaper strike hits Pittsburgh, shuts down all the local distribution. Anyone else sees a problem, Cuban sees a market vacuum.
An opportunity.
A huge one. He starts running papers, probably the plain dealer, all the way from Cleveland, Ohio, back to Pittsburgh, where nobody could get one. He's literally bridging a supply gap across state lines.
It's a physical version of what he'd later do digitally. He finds a place where the established system is failing, and he steps in to deliver the product.
Exactly. And that same practical, financial-first mindset completely dictated his next move, even his choice of college, which is a huge insight from the sources.
Right. He didn't pick the Kelley School of Business at Indiana University because it was some Ivy League dream school.
Not even close. He picked it for one reason, and he's admitted this himself. He said it had the least expensive tuition of all the business schools on the top 10 list.
He didn't even visit the campus before he enrolled.
No. This was not about prestige. It was about minimizing his initial investment to maximize the long-term return of the degree. It's pure cost-benefit analysis on a life decision.
That is so revealing. And of course, once he gets to Indiana, the hustle just continues. He's running side ventures.
Yeah, a campus bar. He was teaching disco lessons. He even ran a chain letter at one point.
But these weren't just jobs. They They were his real-world MBA.
That's it. He was learning management, inventory, cash flow, marketing, all while he was technically getting his degree in management. He was living it. So after he graduates in '81, he does a short stint at Mellon Bank, learns about computer networking, and then he makes the move that changes everything.
He goes to Dallas?
He arrives in Dallas in 1982, starts out bartending, then he gets a sales job at a PC software store called Your Business Software. And this is where his story takes a sharp turn away from the conventional career path.
Because he gets fired.
Fired within a year.
Yeah.
And the story is famous because it just perfectly illustrates his problem with rigid corporate thinking.
He was out meeting a client, right, trying to close a new deal instead of being physically in the store to unlock the doors in the morning.
Exactly. The company cared about punching the clock. Cuban cared about making the company money. It was a complete clash of philosophies.
And getting fired was the best thing that could have happened to him.
It was the direct catalyst for his first big win. The customers he'd been working with at that old job, they became the first clients for his new company, Microsolutions.
Which he co-founded with a guy named Martin Woodall. And they weren't just selling software, they were selling networking solutions for businesses.
All right, this is early days for things like Novell Networks and Lotus Notes. They were building the digital plumbing for corporations, and they were good at it. They landed big clients like Perot Systems, which is a huge deal.
And the business just took off with the rest of the corporate PC boom in the late 80s.
Exploded. By 1990, Microsolutions is doing over $30 million in revenue. He sells the company to CompuServe, which was part of H&R Block, for $6 million.
And after taxes and paying his partners, he walks away with about $2 million.
$2 million, a fantastic first exit. But, it was just the appetizer for the main course.
The dot-com windfall. This is where the timing, the idea, and just the sheer audacity all come together. AudioNet.
It starts in 1995. He and another Indiana alum, Todd Wagner, they just wanted to listen to their Indiana Hoosiers basketball games online. But the local radio feeds weren't being broadcast over the internet.
So they saw a niche, a personal problem that a lot of other people probably had.
And the initial setup, according to the sources, was so basic. They started this thing with just a single server and one ISDN line. It's practically a garage project.
But it solved a real need, and it scaled up so fast.
Right, because it wasn't just basketball for long. They started streaming anything they could get the rights to, niche radio shows, corporate events. By 1998, they'd rebranded as broadcast.com, doing live audio and video over the internet.
And now we get to the timing, which is it's almost hard to believe. It's the first half of 1999. The dot-com bubble is at its absolute peak.
Total mania. Broadcast.com has about 330 employees. It's doing about $13.5 million in revenue in the second quarter. It's not hugely profitable, but it's a content platform on the internet. And that's all that matters.
And that's when Yahoo comes knocking.
And this leads to one of the most famous acquisitions of that whole era. July 1999, Yahoo buys Broadcast.com for $5.7 billion.
Billion. But here's the aha moment. This is the move that separates Mark Cuban from almost every other dot-com millionaire who went broke a year later.
Because that $5.7 billion wasn't cash. It was all paid in Yahoo stock. Highly volatile, massively inflated Yahoo stock.
Which made him incredibly vulnerable. If that stock price crashed, so did his entire fortune. But it didn't.
He has said over and over again that the timing of the sale was just lucky. But what he did next wasn't luck. It was financial genius. He knew the valuations were insane. He knew it couldn't last.
So he hedged. Can you explain for our listener in simple terms what that means when you're talking about billions of dollars in stock?
Sure. Hedging is basically buying insurance on your investment. He used financial tools, most likely things called put options and collars, to lock in the value of his Yahoo shares.
So these tools would go up in value if the Yahoo stock went down.
Precisely. He essentially put a floor under his fortune. He gave up some of the potential upside if the stock kept climbing, but crucially, he protected himself from the downside if it crashed.
He was basically betting against the stock of the company that just bought him.
Exactly. And of course, between 2000 and 2002, the bubble burst. The market collapsed. Yahoo's stock price plummeted. That Broadcast.com acquisition, which Yahoo eventually just shut down.
It's now called one of the worst internet acquisitions of all time.
A total disaster for Yahoo. But for Cuban, because he had hedged, he didn't lose his billions. He kept his capital safe. That move, that one strategic decision, was the firewall that protected everything that came after.
That's the difference between getting lucky and staying lucky. Incredible foresight. And after that massive payday, He keeps working with Todd Wagner, right? They
Yeah.
move into content.
Yeah, they formed 2929 Entertainment,
Hmm.
and they tried to do this vertical integration thing in media, production, distribution, all of it.
And a big piece of that was buying Landmark Theaters in 2003.
Right, a chain of 58 art house movie theaters. He also launched a high-def TV network called HDNet, which later became AXS TV. He was moving his money from the pipes of the internet into the content that flowed through them.
He was becoming a media mogul. And with this massive, secure fortune, his investment strategy it completely changes. It goes from these focused company builds to this sprawling portfolio of bets on the future.
And Cuban's venture capital style has always been about volume and just pure breadth. He wasn't afraid to bet on super early, high-risk tech.
Things like Ice Rocket, the blog search engine, or Weblogs, Inc., which AOL eventually bought.
And he also had this history with people who had become, titans of the next wave of tech, most famously Travis Kalanick.
The guy who would go on to co-found Uber, Cuban actually gave him seed money for his first company, right?
He did. He put $1.7 million into Kalanick's file-sharing company, Red Swoosh, back in 2005.
So he had a profitable, successful relationship with Kalanick before Uber was even a thought.
Exactly. And that context is what makes the next part of the story so painful. It is the big whoops moment of his entire investment career.
So it's 2009. Kalanick comes back to Cuban. He's got this new idea, this little ride-sharing startup called Uber. And the valuation is only $10 million.
And Cuban, he's a tough negotiator. He sees the pitch and he counters. He says the valuation should be $5 million, not 10. He's trying to get a better deal, get more of the company for his money.
But Kalanick said no.
Kalanick just walked. Cuban stuck to his number and he had never heard back. He completely missed the boat on Uber.
A mistake that's worth, what, tens of billions of dollars today, maybe more than his entire current net worth?
It's a staggering miss, and it's such a fascinating look at investor psychology. Here's a guy who made his fortune on taking risks, but his focus on winning the deal made him lose out on what might be the single greatest VC opportunity of the last 2 decades.
A very expensive lesson that even the best investors can sometimes miss the forest for the trees. But his portfolio was definitely not just tech unicorns. He put money into some, let's say, unusual places.
Oh, totally. He famously invested in a company called Brondell Inc., which makes high-tech bidet toilet seats. The Swash, yeah. And then there was the most whimsical purchase of all.
The entire town.
The entire 77-acre town of Mustang, Texas. He bought it in 2021. He told a reporter a friend just needed to sell it and that he had, quote, no idea what, if anything, I will do with it.
That is the definition of having more money than you know what to do with. Which brings us to his most public investment platform, Shark Tank.
Right. He joined in 2011, season 2, and he was on for 14 seasons. He's planning to leave after season 16 in 2025. And he totally changed the show.
He became the star. His volume of deals was huge. The sources say he invested nearly $20 million in 85 deals just in his first 100 or so episodes.
But here's the reality check, and the sources are really clear on this. The handshake you see on TV, that's not the final deal. A lot of those deals fall apart later during due diligence.
Right, like that famous one for the fire hose adapter, Hycon. It was a massive deal on air, over $1 million, but it never actually closed.
It happens all the time. The show is entertainment first, a venture capital fund second.
And this is where we get to the big contradiction that I think shocked a lot of people. Despite some huge visible wins on the show, companies like Rugged Maniac and Beatbox Beverages, Cuban admitted something in 2022.
He admitted that his overall Shark Tank portfolio was a net loss. His exact words were, I've gotten beat.
That's incredible. It's such a powerful lesson, right? That even for a billionaire with a huge, diverse portfolio of these startups, the failure rate is so high that you can still end up in the red.
It's the brutal math of seed stage investing. And that same appetite for high-risk, high-reward ventures led him straight into the world of crypto.
He's been a big proponent. You can see it with the Dallas Mavericks. They started accepting Dogecoin for tickets and merchandise back in 2021.
And he didn't just accept it, he endorsed it. He called Dogecoin the strongest crypto to be used as an actual medium of exchange. A pretty bold claim for a meme coin.
But that kind of high-profile boosterism led to some serious legal trouble. He and the Mavericks got named in a class action lawsuit in 2022.
Right, over his endorsement of the crypto lender Voyager Digital, which went bankrupt. The lawsuit basically alleged that he was promoting a Ponzi scheme. It raises huge questions about celebrity endorsements in these unregulated markets.
And the risk wasn't just legal. It became personal. In September 2023, he got hit by scammers himself.
Yeah, he lost about $870,000 worth of crypto tokens straight out of his own digital wallet.
Wow. So even a billionaire tech mogul isn't safe from the security risks in that world.
It shows just how wild the Wild West of crypto really is. Which, I think, brings us to his most significant and maybe most ambitious project to date. The one that targets a system he sees as fundamentally broken.
Cost plus dreads.
Launched in January 2022. This is Cuban, taking that lifelong philosophy of finding and crushing inefficiency and aiming it straight at the U.S. healthcare system. The goal is pure disruption through radical price transparency.
And the idea actually came to him in an email, right? From a radiologist named Alex Oshmiansky.
That's right. Oshmiansky pitched him on the core idea, and Cuban provided the capital and the platform to scale it up at an incredible speed.
So what's the model? How does it work?
It's shockingly simple.
Yeah.
They figure out the true manufacturing cost of a generic drug.
Yep.
Then they add a flat standard 15% markup. Then a $5 dispensing fee plus shipping. That's it.
No hidden fees, no secret rebates. The price is the price.
Exactly. And that sounds simple, but in the context of American healthcare, it's a revolutionary act.
Because he's going after the PBMs.
He's going directly after the pharmacy benefit managers. For anyone listening, PBMs are the powerful middlemen between drug companies, insurance companies, and pharmacies. They negotiate all the prices behind closed doors.
And they make their money on the spread, right? The secret rebates they get from manufacturers that they don't necessarily pass on to the patient.
That's the whole game. The system incentivizes high list prices and zero transparency. Cuban's model just bypasses them entirely. He's basically calling out the entire supply chain as corrupt and inefficient.
And that desire to take on a powerful, entrenched system. That's a theme we see over and over again. Nowhere more clearly than in his 2 decades as the owner of an NBA team.
Right. Let's talk about the Mavericks. January 4, 2000. He buys a majority stake in the Dallas Mavericks for $285 million. And it wasn't just a financial transaction.
It was a complete cultural takeover.
The change was immediate. The sources show that for the 20 years before he bought the team, the Mavs were a joke. They won only 40% of their games.
And in the decade after he bought them?
They won 69% of their regular season games.
Yeah.
They went to the NBA Finals for the first time in 2006, and then they won the whole thing, the NBA championship, in 2011.
And he completely changed what an owner could be. He wasn't hiding in a skybox. He was on the court, in a team jersey, yelling at the refs.
He was a fan with a checkbook. He'd fly to road games on his jet. It was this super hands-on, highly emotional, some would say micromanaging style.
Which, of course, put him in direct and very expensive conflict with the NBA league office.
Constantly. The sources have him racking up at least $1.665 million in fines over 13 different incidents. And almost all of them were for criticizing the referees.
You have to tell the Dairy Queen story. It's the perfect example of how he could turn a fine into a PR win.
It's a classic. So in 2002, he goes after the NBA's head of officials, Ed Rush, and says the guy wouldn't be able to manage a Dairy Queen.
So Dairy Queen corporate hears about this and they lean into it.
They invite him to come work a shift and see if he can handle it. And to his credit, Cuban shows up. He spent a day at a Dairy Queen in Coppell, Texas, serving ice cream to customers.
What started as a fine became this huge positive media story. It made him look like this fun, down-to-earth billionaire.
But the fines got much bigger than that. He got hit with a $250,000 fine after the 2006 finals for just repeated misconduct.
And then the really big one in 2018, the one that cost him $600,000.
That was for saying publicly that his team should tank for the rest of the season to get a better draft pick. You just can't say that out loud. The league saw it as an attack on the integrity of the game itself.
But there's a key piece of information about all these fines, something he does every single time.
Right. He publicly confirmed that he matches every dollar of his NBA fines with an equal donation to charity.
So a $600,000 fine from the league becomes a $1.2 million event, with half going to charity.
Exactly. He completely flips the script. The league thinks it's punishing him, but he turns it into a philanthropic platform. It's brilliant, really.
And his sports ambitions weren't just basketball. He tried repeatedly to buy a Major League Baseball team.
He really wanted in. In 2008, he put in a $1.3 billion bid for the Chicago Cubs. Didn't get it.
Then he went hard after his local team, the Texas Rangers, in 2010, bid nearly $600 million.
But lost out to a group led by Nolan Ryan. And by 2012, when he tried to get the LA Dodgers, The market had just run away from him. The team ended up selling for over $2 billion.
He had his price, and the market just blew past it.
He also had interest in the NHL's Pittsburgh Penguins and even had his own MMA promotion for a while called HDNet Fights. He wanted to be in every corner of the sports world.
Which makes the end of his time as the lead owner in Dallas so significant. After 23 years, he cashes out.
In December 2023, the sale of 73% of the Mavericks to Miriam Adelson is approved. This was a massive liquidity event for him.
The estimates are that he personally made around $3.5 billion from the sale.
And crucially, he kept a minority stake, so he still has a say in basketball operations. But this move, cashing out $3.5 billion, combined with him leaving Shark Tank, it's a major signal.
A huge redirection of his capital and his personal focus. He's moving on from entertainment, and that leads us right into his history with the law and his political future.
And you can't talk about Cuban and the law without talking about his war with the SEC, the Securities and Exchange Commission. This fight, more than anything, I think, defined his anti-establishment identity.
It all started with a civil suit the SEC filed against him in 2008. They accused him of insider trading.
Yeah, going all the way back to 2004 with shares of a company called Mama.com. The SEC claimed he got confidential info that the company was about to issue new stock, which would hurt the share price.
And they alleged that he sold his entire stake, about $7.9 million worth, right before that news became public, avoiding a loss of about $750,000.
On its face, it looks like a standard case. But Cuban's defense was not standard at all. He went on the attack.
His whole argument was based on a technicality, right? That he never actually agreed to keep the information a secret.
That was the legal core of it, yeah. He argued that without a formal agreement to confidentiality, it wasn't illegal insider trading. But his public defense was much broader.
He took to his blog and just blasted the agency itself.
He did. He called the investigation a product of gross abuse of prosecutorial discretion. He basically framed it as the federal government bullying a high-profile citizen just to make an example of him.
So after getting dismissed and then appealed, the case finally goes to a full jury trial in Texas. This is him, one guy, against the full power of the U.S. government.
And in 2013, the jury comes back. They deliberated for just over 3 hours, which is incredibly fast for a complex case like this.
And they found in his favor, completely.
A total victory for Cuban. He beat the SEC in court, which almost never happens, and that victory gave him a huge platform to talk about what he saw as the problems with Wall Street.
Right. He goes on CNBC a year later and just unloads on high-frequency trading, HFT.
He calls it equivalent to automated insider trading. He argued that these firms use speed and access advantages that regular investors just don't have. It tied right back into his own fight over fairness in the markets.
Okay, so that gives us insight into his view on regulation. What about his personal political philosophy? The sources say he leans libertarian. He's a big Ayn Rand fan.
A huge fan, specifically of her book, The Fountainhead. He said it was incredibly motivating and that it encouraged him to think as an individual, take risks and responsibility. It's that fierce, self-reliant mindset.
But here's the contradiction, and I want to hear how you square this. How does the feels libertarian who fought the government also say that paying more in taxes is the most patriotic thing someone can do?
It's a massive contradiction, right?
Yeah.
And I think what it shows is that his libertarianism is more philosophical than it is dogmatic.
Yeah.
It's about individual freedom and hating bureaucracy, but it's not a rigid anti-tax ideology. He seems to accept the idea of a social contract.
And his political donations have been all over the map. He's given money to Republicans and Democrats. He's supported independents.
He's a pragmatist. And that pragmatism was on full display in the 2024 election cycle. He came out and endorsed Kamala Harris for president.
And he used this really specific business language to do. He called her the only candidate in founder mode. What does that even mean in a political context?
I think it means he sees her as someone who is actively trying to build and innovate, not just manage an existing system. It's a huge compliment coming from a guy like him.
And he didn't just tweet an endorsement. He co-launched Business Leaders for Harris and started rallying other CEOs to the cause.
But the real bombshell, the thing that connects his political ambitions right back to his legal fights, was his stated interest in running the SEC.
The very same agency that he spent years and millions of dollars fighting in court. The irony is just, it's off the charts.
It's the ultimate fantasy of disruption from within, isn't it? The guy who accused the agency of abuse now wants to be the one in charge. It suggests he believes the only way to fix broken systems is to take them over himself.
And these ambitions are mirrored in his philanthropy, which is often just as hands-on and direct as his business style.
A good example is the Fallen Patriot Fund he started back in 2003 for families of soldiers killed or injured in the Iraq War. He personally matched the first $1 million in donations.
And then there's that really powerful story from 2020 about the former NBA player Delonte West, who was struggling with homelessness and addiction.
Cuban didn't just write a check. He personally drove to a gas station in Dallas, found Delonte West, and picked him up. He paid for his hotel, got him into a rehab facility. It was a direct, personal intervention.
Which is so consistent with everything else, right? Sitting courtside, fighting the SEC in person, picking up a former player from the street. He's always in the middle of the action.
It's that fountainhead idea again. Personal responsibility and direct action. He doesn't delegate the things he really cares about.
So when we synthesize all of this whole deep dive, it seems like Mark Cuban's career isn't just about making money. It's about gaining leverage. It's about calculated risks, incredible market timing, especially that broadcast.com hedge, and then using that fortune to challenge any system he thinks is broken.
Here is the pattern. It's so consistent. He sees a system he thinks is inefficient or corrupt, whether it's NBA refs, .com valuations, PBMs, or the SEC, and he attacks it. He applies capital and his platform to try and force a change.
And that pattern seems to be reaching a climax right now. He sells the Mavericks for $3.5 billion. He's leaving Shark Tank. This is a deliberate pivot.
He's cashing out of his mature entertainment assets to free up his capital and his time for these bigger systemic fights.
Yeah.
He's moving from being an investor to being a policy disruptor.
Which brings us to our final provocative thought for you, the listener. Considering his focus on cost-plus drugs, his deep involvement in politics, his desire to run the SEC, is Mark Cuban's next big venture even a company at all? Or is he preparing for an attempt to fundamentally restructure a piece of the U.S. government itself? What's the next systemic flaw he's going to target?
Because his entire career shows he doesn't just want to play the game. He wants to rewrite the rules.
That was the deep dive. We'll see you next time.